Financial technology, or fintech as we all call it, has been on an absolutely roller coaster ride. Seriously, in just a few short years, it's gone through these insane highs, some really brutal lows, and now there's this powerful new force changing the game completely, AI. So let's break down this whole chaotic journey.
All right, let's just start with a little thought experiment. Imagine that a full quarter of all venture capital, we're talking billions upon billions of dollars, suddenly floods into one single industry. What do you think you get? Well, you get a massive explosion of growth, for sure, a healthy dose of chaos, and just a mountain of hype.
Okay, now, what happens when that fire hose of cash just suddenly shuts off? I mean, it goes from 25% to basically zero. You get a crash, a really painful industry-wide correction. And that right there is the story of fintech's recent history in a nutshell.
To really get a handle on this whole boom and bust thing, it actually helps to think about it in terms of seasons. It's kind of crazy, but in just a handful of years, fintech went through a full cycle. You had a hopeful spring, a wild summer, a super sudden fall, and then a really harsh winter that just completely reshaped the entire landscape.
And this all happened at lightning speed. It really started in this promising late spring period around 2018. Then, boom, the pandemic hits, and it launches the industry into what you could only call a chaotic, EDM-pumping summer of just explosive growth. But, the party was followed by a super brief fall and then a sudden, brutal winter. And now, well, it looks like a new spring is finally starting to bloom.
That summer period was just utter insanity. I mean, with everyone stuck at home, digital finance became essential, right? And this just fueled incredible growth for companies like Robinhood and all those countless neobanks, the digital-only ones. It was this chaotic, exhilarating time, with every single company in a mad dash to launch the next new feature and grab a piece of the pie.
But that high-energy summer just couldn't last forever. After a really fleeting autumn in mid-2022, the industry plunged headfirst into what we're calling the Great Fintech Winter. The music just stopped and the party was officially over.
So what caused this sudden freeze? Well, the main culprit was a huge shift in the global economy. That whole era of near-zero interest rates, the very fuel for the boom, was over. All of a sudden, capital became expensive, and for fintechs that were built on lending, their profit margins just vanished.
And look, this wasn't just a slowdown. It was a complete washout. A lot of companies, especially the ones focused on lending, simply could not survive the new economic climate. They either shut down, got acquired for parts, or had to merge just to stay afloat. It was a painful period, for sure. But you could argue it was also a cleansing one for the industry.
But here's where it gets really interesting. The companies that actually made it through that winter didn't just survive. They came out of it fundamentally stronger, way more mature, and with business models that were far more resilient.
This period forced a really critical evolution. See, before the winter, most fintechs were what you'd call point solutions. They were apps that did just one thing really well, like trading or saving. To survive, they had to become more. So they started rebundling services, creating these comprehensive financial platforms. Many of them even went out and got bank charters, turning into full-fledged banks focused on long-term profitability, not just growth at all costs.
And the result of this whole evolution was staggering. The survivors didn't just get by, they became global powerhouses. We're talking about companies like Brazil's Nubank, Europe's Revolut, and SoFi over in the US. They achieved massive scale. And this proved that fintech wasn't some niche startup scene anymore. It was actually becoming the future of financial services.
But just as the industry was starting to thaw out and enter this new spring, another powerful force arrived on the scene. And it's one that presents both a massive opportunity and a pretty terrifying threat: artificial intelligence.
So let me ask you this. What do you think is the biggest use for AI in finance today? Is it smarter investing? Better customer service? The real answer is kind of shocking, and it really reveals a central paradox of AI's role in our financial world right now.
The biggest use case for AI in finance right now is committing fraud. Yep, you heard that right. The most sophisticated users of AI aren't the banks, they're the fraudsters, who are leveraging it to create more advanced, more scalable scams. Financial fraud is already a huge market, and it's growing at an insane 18 to 20% a year, and that growth is being accelerated by these new tools. A truly terrifying example is a scam they call pig butchering. Now, traditionally, this involved human scammers in these boiler rooms building fake long-term relationships with victims over text, just to eventually trick them into sending money. Now, AI can automate that entire process. It makes these emotionally manipulative scams infinitely scalable and dangerously effective.
This quote just captures the situation perfectly. It's an arms race, right? Between the AI-powered fraudsters, the mouse, and the industry's defenses, the cat. And right now, the mouse is winning. But despite those very real threats, AI also holds the key to solving some of the oldest, most stubborn problems in finance. So it's not just a weapon for fraudsters. It's also the tool that is going to build a radically new future for our money. So how is AI actually being used for good? Well, it's already reshaping the industry in 3 key ways. First, it's creating more logical credit scores that are based on real-time cash flow, not just some outdated history. Second, it's automating all these complex workflows inside the big banks. And finally, it's paving the way for this incredible concept called agentic finance. For decades, huge parts of the financial world have been run on this fragile web of spreadsheets and manual processes, all handled by really expensive teams of people. AI is finally changing that. It's building intelligent software that can tackle these complex tasks in compliance, risk, and treasury management, making these massive institutions way more efficient and secure.
And all this leads us to the ultimate vision, agentic finance, or as I like to call it, self-driving money. Just imagine an AI agent that totally understands your financial goals and automatically manages your bills, sweeps extra cash into high-yield savings, and invests for you. I mean, getting a mortgage or building a portfolio could become as simple as just having a conversation.
All of this leads to one final provocative question. As AI becomes capable of managing our entire financial lives, our relationship with money itself is about to fundamentally change. The technology for self-driving money, it's not science fiction anymore. It's right around the corner. So the only question left is, are you ready to hand over the keys?